I used to be more wary of doing this plan and trying to get full student loan forgiveness. The reason being, if you look at the debt. What's going on, guys? Welcome back to the channel. My name's Adam Nessim. I'm a fourth-year medical student in New York City, and on this channel we talk about how to increase your productivity and personal growth and development for both students and entrepreneurs. In this video, I'm going to be talking about something that many of you are probably all too familiar with, and that is student loans. I figured this would be a good time to talk about it, as student loan repayment is starting up again on February 1st. So if you didn't know that, now you do. Make sure that you are prepared, because the interest on those loans is going to start accumulating at that date, and you're going to have to start making those payments again. So I'm a little bit of a personal finance nerd. This is a topic that I really enjoy learning about, and so I figured I'd share it here on this channel, because I'm really just trying to talk about things that could help with personal development, growth, and knowing your finances, especially as a pre-med medical student, future doctor, is something that I think is so important and unfortunately not taught throughout a pre-med or science usually related field. And so I'm just going to give you a few of my thoughts on the topic and things that you should be thinking about if you have a ton of student loans like I do and need to start potentially repaying it, or your interest is going to be accumulating starting again on February 1st. So if you are like a first year or second year medical student, honestly, it's not really that big of a deal. It's because you've honestly just gotten a break from the interest rate, but there's nothing for you to do. You're going to be deferring your payments until you start residency at least, and so I wouldn't worry too much about it. You're going to have to take out loans to invest in yourself, in your education, and you'll be able to pay it back on the back end if that is something that you are financially responsible with and get aggressive with. I actually really recommend to anyone in the medical field to check out The White Coat Investor. He has a great book and also podcast. I'm not affiliated with him in any way, but I really love his information, and for anyone in the healthcare field, I think it's important to check out. Even if you're in not the healthcare field, a lot of the principles he talks about are really sound personal finance principles on getting aggressive with paying back your student loans, saving for retirement early on, all that good stuff. So what are my thoughts on this current policy where interest has started to accumulate? Well, for me, I'm a fourth year medical student, and in July, I'm going to have to start paying my student loans, because that's when I'll be starting residency, hopefully, knock on wood. And so there's really two ways that you can go about paying off your student loans. You can do a income-based repayment plan, which is through the government, where you pay a percentage of your income. So for most residents, that's much lower. And you can either go through this repayment plan until you pay it fully off, or you could try to get student loan forgiveness, where you would make 120 qualifying payment. Now, I used to be more wary of doing this plan and trying to get full student loan forgiveness. The reason being, if you look at the data in the early years of this program, it was some abysmal number like 3%, and you can fact check me on this, so don't take this as fact. Oh, and I should mention, this is not financial advice. This is just for educational and entertainment purposes. I'm not a financial advisor. All right, moving on. But if you check that number, it was a lot of people. What ended up happening, they didn't have the proper forms. They may have missed payments. You have to do 120 consecutive qualifying payments, and we'll talk about what qualifying would be in just a bit, in a row, so that, or not necessarily always in a row, but you have to make the 120 qualifying payments to be able to get the student loan forgiveness. And the problem was, a lot of people weren't doing this, and so they were accumulating all of this interest. They were making minimum payments, because if you're on an income payment plan or income driven repayment plan and you're making a residency salary, then your payments were generally low and you were incurring a ton of interest. And what happens is, now all that interest is added on to what you owe back. And if you don't actually qualify for the full loan forgiveness, then you just put yourself in a much worse situation than when you started. So for a while, I was very weary of this option. However, I think that the program has matured. They're a little bit, especially during these times, if you know what I mean, more lenient with the rules and regulations. And so I do think it's a good option for you, especially if you know that you're going to be in a long residency program. So some residencies could be 6-7 years. And all those years you're at an academic institution, which actually qualify for those payments that I was talking about, the 120 payments. So during those years, every payment you are making every single month will be a qualifying payment, because to be a qualifying payment, you have to be on a government income driven repayment plan, and you also have to make those payments or being employed by a nonprofit 501c3 or government employer. And when you're in residency or fellowship, those will qualify. So really, let's say you have I have a 5-year of residency, because I'll do a prelim year, and then I will do 3 years of hopefully PM&R residency, and then 1 year of hopefully a fellowship. So that'll be 5 years. So if I were to work for a qualifying employer, like an academic institution, and you have to double check that you're actually working for a qualifying employer for 5 more years, then it would definitely make sense for me to go for the student loan forgiveness plan. However, let's say you want to go into private practice, then that would not qualify, and therefore you should think about being a little bit more aggressive early on and paying off that interest and not letting that interest accumulate with your loans. And so that's how I'm thinking about it. I've definitely been using the income that I make from things like the pre-med consultants and a bunch of other things I do to try and pay back the loans, and I still had to take out a ton of loans. And so I think for me, I probably won't go the student forgiveness route, the loan forgiveness route, and I'm also not sure what type of practice I'll end up in, but it's definitely an option and something worth thinking about. The other option, if you don't do that, is to refinance your loans. So what does that mean? Well, basically, when I'm about to start residency, I can take all the different loans that I have, find a refinancing company that'll hopefully give me a better interest rate than what I currently have, which is about on average 6% with my government loans, and I can refinance to hopefully a 3 or 4% interest rate. So basically, the refinancing company will give me however much money I owe still, pay off my loan, and now I'll have to pay back the refinancing company. And usually they have better, well, no, the whole point is they should have better rates. Sometimes they have bonus incentives for signing up with the refinancing company. And if you have different private loans, you could also refinance as well with your government loans. Now, with that said, be very sure that you want to go down this route, because once you do it, there's no going back, and you can't get that student loan forgiveness. And so you need to know that this is the right decision for you, but it's another good option when it comes to repaying back your loans. So that's some of the things that you should start thinking about, especially if you know you're going to have to start making payments soon. And on February 1st, that interest rate is coming back and payments are starting up again. And the refinancing companies generally follow suit with what the government's doing. So they've been giving some loan deferment and 0% interest rates for people that have refinanced, but they're going to be having payments come back as well very soon. And so you need to be prepared for this. If you enjoy this type of content and you want to hear more of my personal finance journey and things that I do and with retirement accounts, like setting up a Roth IRA or 401k, things like that, then let me know in the comments below. Please subscribe, like the video. I'm really going to be making a major push in 2022. My goal is to get to at least 10,000 subscribers in 2022, and I'd love for you to be on that journey with me. So with that said, hope everyone's doing well and have a great rest of the day. I'll see you in the next video.